the definition of costing and type of cost. So friends, we have already learned that there is a business owner, there is a business transaction to carry out the economy. There are two types of business owners, right? One is the person who provides goods or who sells the goods. And the second is the person who provides services or sells the services. Now, these goods or services are sold at certain price. Now, at any profit organization, whenever they sell the goods, there is a profit margin attached to it. Now, how to determine the selling price? How this profit margin is calculated? It cannot be defined until we know the cost involved in the product. For example, a trader. What is a trader? A trader is someone who purchases the goods and he sells the goods. So here we start with chapter number 2, that is methods of costing. Methods of costing means what? Methods of costing means different types of costing techniques used for determination of the cost across the various sectors. So there are various methods of costing. First is absorption costing or historical costing. What is the absorption costing or historical costing? Firstly, it is used in a single product company. So, if a person manufactures a single product, a single type of a product, in such cases, it can be used. That is, all the costs accumulated together incurred by a manufacturer. That is, complete material, complete labor, complete overheads, complete admin, complete selling, complete everything, every cost that is incurred to manufacture a product divided by number of units manufactured is the cost price of that product. There are various problems in this methods. First is all the cost incurred cannot be just put towards a particular product. So here we start with chapter number 3, that is techniques and usage of costing. Now in earlier chapters we have already understood what is cost, how the cost can be calculated for the different type of entities. Now that cost needs to be compared in the market so as to arrive at the proper cost. So there are two basic techniques to understand whether the cost is properly determined or not. The first technique is known as standard costing and the second technique is known as marginal costing. What is standard? If I say this is not up to my standard, what does that mean in a layman language? That means I have thought something that this is up to this mark is proper and above that is best and below that is not considered. So even in the standard costing, an organization estimates a cost of a particular product. That is, up to this cost, a product needs to get the product manufactured. Here we start with chapter number 4, that is cost sheet and cost audit. First we will focus on cost sheet. What is cost sheet? If we say above the accounts, there is a profit and loss account, there is balance sheet in the financial account. For particular cost, determining the cost per unit, there is a cost sheet prepared. There is different types of cost. Based on the cost, added in the same. So to start with, first and foremost, there are three important costs. That is direct material, direct labor, and direct expenses. For example, if I need to manufacture a shirt, we'll go with the shirt example. So there's a direct material of a fabric, there is a direct material of there's a direct labor who cuts and who stitches the garment,